All right, Matt, the mortgage guy here. As promised, recording a video today just to talk about the state of the housing market. How did we get here? Factors contributing to the current housing market, what to expect, what to hope for. And then finally, I'll end the video with my predictions for the next 12 to 24 months. As a mortgage broker who talks to hundreds of consumers every single month, who talks to dozens of real estate agents every single day, I think I sit in a great position to be able to look at the market, not just search Google and read articles like most folks, but also conversations with folks who are out there buying homes, real estate agents who are out there helping them, to get a real feel for what is going on in the market. Because like a client recently pointed out to me, a lot of this data is 1-2 months old, and a lot can change, as anybody who's following the real estate market knows, in a short period of time. Month over month numbers that are over 1% just shows you that if we've got data that's from February or from January and we're heading into April 2021, this stuff might be dated. And I had a client talk to me yesterday and say, hey, Matt, I'm reading this or I'm hearing that, but you've got your finger on the pulse. You're dealing with people every single day. You know what's happening, to the hour. So enlighten me. So that's what I'm hoping to do with this video. If you're not subscribed to the channel, I just try to break it down in easy to understand stuff, simple terms so that I can understand it. And then I just speak on my experience, what I'm seeing, hopefully in a simple way that anybody who comes across my channel can understand it. So if you like mortgage, real estate, and investing advice from somebody who's in the trenches on all three, please consider subscribing. It's something like 92 or 93% of you that are here right this second are not subscribed. So without further ado, let's get into it. The state of the market. As anybody knows, most areas of the country are absolutely bonkers. And first, before I talk about the why, let's just talk about the state of the market. These are Case-Shiller, who has a home price index talking about price appreciation, meaning if a house cost $300,000 last year and it costs $330,000 this year, it's seen 10% price appreciation year over year. And here's some of the hottest markets. Look at this. Phoenix, 15.8%, Seattle, 14.3%, San Diego, 14.2%. As a general rule, when you're talking real estate and people tell you, real estate appreciates over time. That's why it's a good thing to own. Historically, 3, 4, 5% appreciation is what you honestly want to see, and it's a healthy level of appreciation. When you see stuff like this, 15%, I mean, it's bonkers. Imagine last year you were thinking about buying a home in the $300,000 range, and it's appreciated almost 16%. That same home costs $348,000. Now, there's certain factors like if rates have gone down a full percent, maybe the payment hasn't changed that much, but still this level of price appreciation is a little bit bonkers. And next, I'm going to tell you exactly why. Anybody who's paid attention to real estate has heard in some form or another somebody talk about, and is really the simplest way to think about it, supply versus demand. There's a lot of demand and there's very little supply. And I don't know, what do I want to go into first? Let's go into supply. This is a chart that goes back, 30 years, and it's charting existing home inventory and new home inventory for sale. And this, if we move this represents like 4.4 million homes for sale. And we don't even get to today. But if you look, like this number, if you pull it across here, is probably 1.7 million homes. This number is almost down to 1 million active listings. So we've got 1/4 of the inventory we had back in 2007. And that's absolutely bonkers. The reason I use this chart, because I really liked it, because it actually shows you, here's the new homes and here's existing homes. Just to see, like, are home builders building? Do home builders realize we need more inventory to where they're just building like crazy? And the answer is not really. We really haven't seen the amount of new home builds that we really need to even get anywhere near quenching the demand. I saw another graph that showed kind of this. Let me see if I can get that in there. And 1 million on one end for what the current inventory is, and like 3.7 million for if we had that, we would have a fairly balanced market. So we're about 2.7 million homes short. One of the reasons I thought this was interesting that the amount of time somebody lives in their home has increased. And that's part of the reason why we have a shortage of inventory is people are living in the same house for 10.5 years. And that is up substantially from, this over here and this red line is turnover, meaning how often do people move, right? And that's also like at 1/3 of the level. So this was probably like 3 to 5 years back then. People were moving houses, and now they're in the same house for 10.5 years. So people aren't moving. And the pandemic amplified this, but I've looked at charts that go all the way back to 2013, and we've seen like this steady increase in demand and decrease in supply. It's just gotten wider and wider and wider, hence home prices going up. On the demand side, I'm going to talk about who's buying houses, and I'm going to talk about the steroid that is mortgage rates. Anywhere that you read or hear people talking about this crazy amount of demand for real estate, you'll hear about people talking about interest rates. When interest rates go down, there's more demand. I mean, that's just the simple version. There's no need to, make it fancier than it has to be. Interest rates, at 3% makes it very attractive for someone who's qualified and wants to buy a house to buy a house. Now, here's something that I've heard a few times, and it bears repeating. This chart shows you, here's birth rates, right? And so that line is pointing to somebody who's 33 years old today, born in 88, right? Here's the birth rates. It goes up like a ladder, like tons of these millennials who are right in the middle. I think millennials are 20 something to 30 something, right? This is when people buy their first house, a vast majority of them, between 33 and 36. And this chart of demographics shows there is a lot of them. And I can tell you with absolute certainty, because I'm talking to them every single day, that the 33 to 36 forming a family, having kids, buying their first home, this makes up 30% of the market. 30% of people who are buying homes are in this demographic, and this demographic is growing like crazy over the next 3 years. That's why when you talk about future demand, if rates go up 0.5%, if rates go up 1%, we've still got a ton of demand. And as much as I would like for a tick up in rates to cause a huge demand quell, it's really going to take something super dramatic for that to happen. So I just don't see it. We've just got too much demand on the horizon. So that kind of ties into what to expect. Here is new home inventory, which I'll speak a little bit on this. There was building. It tapered off, and I think the pandemic slowed things down. One thing that I couldn't find, and I'm surprised more people aren't talking about it, is lumber costs are like 3x what they were a year ago. That obviously has an effect on builders, builders who are building in places like California, where I live, who already have to deal with permits and regulations and the exorbitant cost to build a house. If now it costs $20,000, $30,000, $40,000 more to build a home, some of them might pull out altogether. Or build less because it's riskier if it costs more. So that's something that's not being talked about a lot, but it's making the problem worse. If it was easy to build a house, if there was low barrier to entry and not a bunch of red tape and costs and permits and lumber was cheap, these home builders could build a lot more, and that would help. So that's that. One more thing that I wanted to touch on here that was interesting to me. Where'd we go? On the construction side is that year over year, and think about this. This is pre-pandemic numbers, so it's not like, well, maybe it is. Maybe pre-pandemic they were building more and then we're down 10% or 9.3% year over year because, they've got new stuff to deal with and whatnot. But here's the good number. Permits are up 17%. So they've completed more homes. The starts are down, and this probably has to do with lumber cost and other things that are kind of putting things on pause, but permits are up 17%. So this leads to thinking about future home building is going to be on the rise, which we need, right? And so I'll end the video with, what to expect, what to hope for, my predictions. I think that ultimately the factors that drive demand and that control inventory, like how long people stay in their house, how many new houses can be built, are not going to be enough to cause a humongous imbalance to go to flip this thing, right? From a seller's market to a buyer's market, 25% decline in prices. As much as I'd love for that to happen, for all the clients I work with, for me personally as an investor, I just do not see it happening. And I don't want to get into it in this video, but forbearance and eviction moratorium and all that other, pot is probably something for another video. So this one doesn't go too long. People are exiting forbearance. It's under 5% now, total forbearance as of the latest report. And it's almost half of what it was May of 2020. They're continuing to perform as they exit forbearance. It's just the numbers we thought we saw and the trend that we thought continues, where it's just not going to be mass foreclosure event that some people predict. No matter how many videos you make on the market crashing in 2021 on YouTube, you just can't bring it to fruition because data and what's going on doesn't match. Like the dream or the hope, you get a lot of clicks and good for you for those videos, but it's just not happening. So what to hope for is that builders continue to build. People are not afraid to let people in their homes and they start moving around again, because that was one of the biggest issues, I think, in 2020 is people were just kind of landlocked and not selling and exacerbating the problem for the other people that are trying to move. And, they can work from home. And so they're trying to find a new home, but there's no homes for sale. And that you can also hope for the Fed and the powers that be that control interest rates and keep rates low to start to ease off as the economy recovers so that rates go up a little bit and it tames demand. As much as, folks that I talk to are like, I want home prices to go down 20%, I want rates to remain low, and I want the government to continue to pump out stimulus and help me out. Like, you can't have your cake and eat it too. You can't have it all. So let's just hope for slightly higher rates, slightly more inventory, a little bit more balanced market. And then, maybe this year we get 10% price appreciation. Next year, it's only 5%. And the year after that, maybe flat. I mean, that is a realistic expectations. And if you want to talk about my predictions for the next 12 to 24, 2021, mostly just due to supply and demand, and I keep it simple because I'm a simple dude, 10% price appreciation, because maybe as more inventory hits in this spring and rates tick up, it slows down a little bit. Like this 15% appreciation or 13% or whatever we've seen over the last 12 months, that cannot continue. So let's call it 8 to 10 in 2021. And in 2022, maybe let's call it 5 to 6%, a healthier level of price appreciation. So that's that. My opinions are going to change. I'm just some dude on the internet, so take it for what it is. Any questions at all, please feel free to reach out. Matt, M-A-T-T, at mattthemortgageguy.com. Licensed to do business in California. If you're outside of California, happy to refer you to a great mortgage broker outside of California. Thanks for watching.